A not so fun fact that we came across in our research from Dimensional Research shows that 82% of people find the month end close process to be a negative experience, citing increased levels of stress, impact on relationships, missing life events. And that's certainly something that we've seen to be true in customers and companies that we've talked to. But fortunately, it does not have to be this way. And that is what today's presenter, Dennis Easter, is going to explore. Dennis is a senior business consultant with Algorithm, and he is one of our best financial planning and analysis experts. So with that, Dennis, I will go ahead and pass off the reins to you.
Thanks, Alex. Thanks for coming, everybody. In a previous position, I was the information systems director, and so I was in charge of their ERP system, CRM, the business applications that were used across the enterprise. And we had a new CFO who had just completed his first month-end close, and so he was really unfamiliar with the software that we had, but he had decades of experience in accounting and month-end close, so he knew what the process should be like. And he looked across his desk at me and he said, I can't do this every month. This month-end close is extremely painful. I've not done one like this for years, so help me out. Let's talk about a solution. And so what we're going to talk about today are some of the things that we came up with in that conversation, as well as some new things that I've learned throughout the years and as from my own experience. Because one of the things that finance departments are faced with now is the opportunity to become a trusted advisor in the organization and have a seat at the table because of some unique positioning that they enjoy. And so one of the things that we want to do is take a look at that position and the process. And technology has changed the way that people live. More and more people are inundated with information, and they're able to get data and information in real time from a myriad of sources. They can track their orders that they placed online in real time. They're getting news feeds all the time from things happening across the world, and technology is, changing at breakneck speed and enabling more and more of this with the advent of web services and the internet. And so these changes in the personal life are creating an expectation in the business world for on-demand information. And nowhere else in the organization is there the access to enterprise-wide data the way that there is in the finance office. And so the finance professionals are uniquely positioned to become the trusted advisors and the source of insights that as never before. And we can see here, here's a comment from Mark Garrett, the CFO at Adobe. He says, I don't want my financial planning people spending their time really creating spreadsheets. I want to focus on what the data is telling us. And that's actually a precursor to Adobe began an effort to get rid of using Excel in their finance departments. And so one of the things, as Alec mentioned, the month-end close, as a CPA, as a former controller, I remember the month-end close. I don't know of anyone that ever gets really excited in a positive way about the month-end close. And so let's take a look at some ways that we can help you. Some of the things that we talked about years ago with this CFO to introduce cultural change into the organization to help with that dreaded monster, the month-end close. First of all, what we did is we started a review of the control environment. We'll talk about each one of these in more detail. We looked at ways to integrate data directly into our reporting system. We also generated some system-based reconciliations, and I think there's some real advantages in this. This is a quick win in some areas. We use report templates, and I'm sure that many of you are using report templates now. I think maybe we took it a step further. And then we also looked at how we could use automation in order to take some of the manual steps that we did and take them out of the hands of a person and free them up to do other things. So let's jump right in. Reviewing the control environment. Excuse me. Now, when I talk about control environment, I've probably got a little broader definition than some others. I go and include in my control environment, the ERP and the source data setup. Reviewing that to make sure that the systems that you're counting on, your ERP systems, your CRM systems, your payroll systems, are set up in a way that you have confidence in the output and that they are taking as many decisions out of an individual's hands, and everything that can be system-driven is system-driven. For example, I was talking with a CFO earlier today, and there was a month-end issue that they dealt with to where every month they ran a report and took the information from that report and generated a journal entry based on that information. And in that, they had to double check the work because they're introducing the opportunity for error. And so, their control, right there was a weakness in their control environment because they weren't letting the system do the work. So we talked about how they could change that. Because as we think about this, if you're letting the system do the work and it's set up properly, then there are fewer manual adjusting entries, which then frees you up to do more analysis. The review time, the ticking and tying is decreased because you're able to gain confidence in the system. One thing that, in the control environment that you can do is, set up those detective controls. So if you look at, you go back and find out what problems are occurring on a regular basis that are causing the finance team to have to make adjustments. And you do a root cause analysis, and they typically go back to setup issues. And there are tools out there to help monitor those type of setups. So you build in some detective controls so that as soon as an improper relationship is detected, then someone can be notified and it can be corrected before you start to have, those components of the transaction start to generate errors that have to be created after the fact. Or, you've got to adjust the transactions as part of your month-end close. But probably, one of the biggest benefits and the things to keep in mind, especially when you're in your control environment, is that this gives you an opportunity to drive accountability back to the people that are responsible for the information. And so, the whole goal of the control environment is to make sure you have confidence in the data that's being presented. A benefit of that is you reduce the number of manual adjusting journal entries that are made every month. And I don't know if you do it or not. Something that I would suggest that you do in order to help drive some of this culture change is establish a KPI for your finance department for how many adjusting journal entries are made every month. So to be clear on this, an adjusting journal entry, manual adjusting journal entry for me is not, recording the recurring entry for depreciation. There are ways inside of many of the ERP systems to, create that to where you don't have to re-enter the journal entry every time. The adjusting journal entry is not necessarily your recognition and accrual of your prepaid expenses, to move those off the balance sheet into the P&L, because those two can be semi-automated. I'm talking about the reclassification entries, the posting entries, the corrections because some transaction didn't get conducted properly. So if you don't have a KPI for adjusting journal entries per month, then I would suggest that you look into that. So the control environment really sets the stage, and once the control environment is in place, then that takes care of the first part, and that is developing the source transactions. Okay, because now when we look at the next part of the month-end close, we've got our source transactions. Now we have the review. And so in the review part, one of the keys to the review part is data integration. And that's where you can, take the data that you need in order to make a thorough analysis and, pull it directly into your reporting solution so that you can do your review on a very systematic and controlled manner. So having this direct data integration is, eliminates manual entries, so that reduces and eliminates that error factor. Again, we're reducing risk in this. Another thing that allows you to do is report from multiple data sources in a single report. So if you're using head count or pieces produced or some other production driver in order to make sure your analysis is complete, unless you're using some sort of direct data integration, somebody has to manually enter those numbers, and that then brings up, the risk for errors. And, one of the things that has happened is that, back in the 80s, when spreadsheets were introduced, accountants, saw their profession in a whole new light because they could do so much more. But spreadsheets haven't kept up with the time. And so this is where if you're only using spreadsheets for your analysis, then you probably have a weak link in the system that could be causing you problems. And so that's where you look to a data warehouse in order to complete this data integration, and that's really allows you to do some more complex consolidation work if you've got multiple companies. It also allows you to do comparative work between budgets and multiple forecasts as well. And so the data integration piece is, presenting that data for review in a way that, again, you've reduced the risk for errors in your calculations. Now, another part of the review that's often overlooked is creating a system-generated reconciliation. Part of what we have available to us now with technology is the increasing use of artificial intelligence and algorithms, in order to speed up the calculations, speed up comparisons, and the analysis. And so if you think of the reconciliation, the basic ticking and tying, do your subledgers match your general ledger? What variances exist, and what about intercompany accounts? Okay, those are all things that are easily, you can easily create a formula to have the system validate that for you. And so within that, if you can have the system generate the reconciliation and then provide exceptions, you're able to really spend less time with that basic review and focus the conversation on the work that then needs to be done in order to validate and support the variances. So you can provide a more focused conversation for getting information from department managers. And then you're partnering with them to provide the answers, the results that they're looking for. And then this is one of those things, the ticking and tying, of comparing balances and exceptions. There's not a lot of value add there. The value add comes from the analysis of why there is a variance. And so it lets you take the effort that you would put into that manual ticking and tying. Let the system do it. Let you make yourself that advisor, that partner to help present the information that people are looking for to help better explain the operations. Okay. Then, and so now we have the review. We've got preparing the source data, and now we've got the review done. And now we come to reporting. And one of the things that we talked about was generating report templates. And having the report templates auto-refresh, as the data is updated throughout the period. There are some reports that you may have a flash report that management is looking for. And that's not related necessarily to the month-end close, but you're using a report template for that. And if you're building it on a system where you've got the data directly integrated into it, then it makes your life much easier in preparing that. Okay? But with report templates, you not only have that auto-refresh, but you can also have the report template set up to where you can report on all of the possible combinations. And so if you have a multi-company setting, you can set your report template up so that you see a consolidated view, and then, with eliminations. And then you can also set up that same report and use that same report for individual company performance. And, depending on the system, you can have all three of those reports generated at one time. And then you can do the same thing with departmental reports. And then really, we'll look at the next step, with the distribution, is that if you set up rights and security and such, then it helps with the distribution of the report so that you can make sure that the people that need the information are getting the right information, but you're not crossing any boundaries, and you're not causing or presenting information to someone that their eyes shouldn't be seeing. So as we're going to look at the distribution now, because one of the things that we talked about in a way to make the close better is automation of the report distribution. So let me tell you about the reports the CFO generated. So he had a company-wide financial statement, and there were two divisions, and so then each one of the divisions had its own set of financial statements. And then within one of the divisions, there were 5 different departments, and they all had their monthly expense statements for the managers to review. And so with that, he had multiple balance sheets, he had multiple P&Ls, he had multiple cash flow statements. And because he was using Excel, he used an Excel add-in to create his financial statements. They built the financial statements so that it was all in one workbook, because that way, when you wanted to print it, you just printed off one workbook. Well, the fact that they were using an older Excel add-in, and some of you may be able to relate to this, when he pressed F9 to calculate, it was a 35 to 40-minute wait before all of the sheets in the Excel workbook would update. And so with that, then he, because of the previous CFO hadn't controlled the spreadsheet, he was finding and having to go through, and there were places where people had plugged numbers. They'd gone into the Excel formula. You guys have never heard of this, I'm sure. And they had hard-coded a value because it was something that they needed to do in order to make the reports look the way that they wanted to for a certain period. And that just never got updated. That never got taken out. And so then you had to go searching for all of those values later on. So, so by using the automated report templates that are available in many reporting solutions now, is that you generate a template and let the system select the reports that each person gets. And because they're templates, the reports aren't changeable. Nobody can change their income statement or their departmental expenses. They have a single source of the truth. Okay? The administrator creates the report templates and the layout and the formatting, and then the system automatically distributes those, maybe via email, for your presentation to management or a board of directors. You can also import those reports into Word or PowerPoint as well. You can also, in most of the reporting solutions on the market now, people can view the report inside the application, and it's the template so that they can't change any of the numbers. But what they can do is simply by changing a parameter, from a drop-down box usually on the report screen, they can move between a consolidated view or a company view or departments, all based upon the security that they have. And so the automation is really the capstone of now we've got our good source data because we've got a strong control environment. We're pulling the information into our reporting solution through a direct data integration and reducing the risk of errors. We're letting the system generate a reconciliation that then allows us to spend more time for analysis. And we're also letting the system generate reports and distribute them for us so that we don't have to print the same Excel spreadsheet, or 20 tabs of an Excel spreadsheet individually in order to get the reports to the right department head. So, by using these type of things, by using a control environment and data integration, automation, the report templates that we talked about, you can take the painful month-end process and take away a lot of the non-value add that you have, and then you can start to spend that time on the analysis and being able to tell the stories so that as you're presenting to the board of directors, you've got insights into the numbers and you can start providing answers before they ask, which is always a good position to be in. And so, as one final note, I like stories. I'm not particularly good at telling them. But I want to recount back on September 1st, 1898. The Modest War had been going on for some time, and it was a repeat of the same thing nearly day after day. In the evening, underneath the moonlit sky, the British soldiers would be sitting around their campfire, cleaning their single-shot rifles. And across the way, they could see the campfires of the dervish warriors. And around the campfires, the dervish warriors would, be whirling and dancing and chanting around their campfires and doing the graceful dervish dance with their swords, really working themselves up into a warrior frenzy. And the sun would come up, and the dervish would line up on the hill above the valley, and the British soldiers would make their formation in the bottom of the valley. And the dervish, in their altered mental state, would run down the hills, mostly on feet, swinging swords, some on horseback, with very few rifles. And they would rush towards the British soldiers. The British soldiers would lower their single-shot rifles and fire in unison, wounding many of the dervish. And then the dervish would be upon them with their swords, and there would be a time of hand-to-hand combat where many were wounded on both sides. And then both sides would retreat to their camps. And this went on for some time. And then the evening of September 1st, 1898, the scene appeared to be repeating itself. The British soldiers were sitting around their campfire, cleaning their single-shot rifles. The dervish were dancing and twirling and chanting and singing around their campfires, whipping themselves into a frenzied state. And at 6 o'clock in the morning, the British soldiers formed rank. The dervish rushed down the hill at them. But this time, the British soldiers deployed their rapid-firing Maxim guns, and none of the dervish warriors came within 50 yards of the British ranks. And shortly thereafter, the modest war was ended. And so there are opportunities that we are faced with to move ahead, and it's up to us to make those decisions of where those opportunities will lead us in our quest to become trusted advisors and add value to our organizations. So now, if we've got any questions, more than happy to answer.
We sure do. Thank you for the presentation, Dennis, and the whole history lesson there. I now know where the term whirling dervish comes from, so you learn something new every day. So we do have a couple questions here. One is, well, really a couple here referring to the report templates and what tools you're using for those templates. So they say, we use Excel with an add-in currently, but not aware of the systems that can do these reports instead. What's an example of one of these systems?
Oh, yeah, great question. And this is one of the cool things about the times that we live in, is technology is making things available to us now that even 3 or 5 years ago nobody would have dreamed of. And algorithm represents a couple different solutions. Depending upon your level of need, complexity, the operations, what you're looking for. FYI Soft is one of the products that we represent. We partnered with FYI Soft, and we developed an integration to Macola software, to Macola ES or M10 as it is. They've got probably a dozen or more other ERP systems that they've built direct integrations with, including Acumatica. That's where we first met them. And then we also have BI 360, which is more of a complete CPM product that helps with some pretty complex modeling in not just your financial reporting and helping with this report templates and automation and such for the month-end close, but also for managing your budgeting process, creating forecasts, creating planning models that extend across the enterprise, so that you could actually start with a sales forecast and work your way down through production planning and cash flow planning as well. So, and then another product similar to that is Profix, that is on the higher end of the scale. So those are just three of the products. Those are the three that we have at Algorithm have decided best fit our customers' needs. And so if you're looking for a solution like that, then we're more than happy to talk with you.
All right. I've got a Macola specific question here, a little bit of a longer one here, Dennis. So one thing that I have a question about, this comes from Charlie, is the actual close process in Macola. It currently takes us 6 hours, and we have 2 companies to close, just to run all the processes and reports suggested for the month-end close. The main processes that take the longest time is the reset allocations, reset quantity on order, freeze inventory, reset beginning balance records on hand, and so on. Any tips to speed these processes?
One of the things that that you can do with many of the Macola processes, in particular, is you can look at scheduling them so that they run off hours, because many of the processes that you listed don't need to be run specifically at month end or period end, but they're included in that month end process mainly to make sure they get done, but they're really just maintenance tasks that can be scheduled and run at times other than just the month end close. And if you've got some more specific questions, Charlie, then let us know. We'd be more than happy to walk through the processes with you and help really define a month-end close checklist, if you will, that works for you.
All right. Another question here. In your experience, what parts of the control environment are most likely to cause issues?
Oh, yeah, good question. And again, there are really two areas that I think need a lot of attention. And one is and depending on your ERP system, I don't know, specific names, but if you look at where the control files are that determine what general ledger accounts are used when creating inventory transactions or production transactions, for instance, and also what costs are used. There are a lot of the systems now you have flexibility in assigning which cost is used for based on the inventory item or based upon the customer, and so that can have a real impact on your the results of the transactions. And so first of all, I would say would be the system setup, the control file setup, and then the second is the setting up entry, data entry and transactional entry templates, if you will, and having the system default as much information as possible to take it out of the hands of human discretion.
All right. Got one more question here, and definitely feel free to submit any others you may have while we cover this one. So this is, we use an Excel add-in. Isn't that the same as data integration?
It is not. So we can talk a little. Let me talk a little bit about the way that Excel add-ins work. And in 2010, there was a major shift in the way that Excel add-ins worked, especially when they're pulling directly from an ERP system. Prior to 2010, which for those of you that use, because of our history with Macola software, those of you that use the Excel add-in, you're dealing with a pre-2010 Excel add-in. And what it does, if you think of the formula that you build in each one of the cells, it's actually using each one of the arguments in the function as a filter, if you will, and it's doing a SQL query back to your general ledger transaction database and gathering the information for that cell and then populating it. And so if you think of, a report that, combined you've got, 1,000 cells of information being pulled from your ERP system, it's running 1,000 SQL queries, which is why performance is sometimes really not very good. Okay. And so the problem that you have with an Excel add-in such as that is you're limited to the data source that the Excel add-in can pull from. And so with data integration, it allows you to pull multiple data sources into a single report. Because you can, through the data integration, you can pull in information from your general ledger. You can also pull in information from your payroll system. So now, instead of typing in the head counts for each department, you can actually just have them integrated and pull them into your report. And so data integration allows for multiple data sources. Excel add-ins are restricted to a single data source.
Understood. Do you have another question here, Dennis? Does algorithm have a month-end close process for Macola that distinguishes between what reports need run for the month-end process and those that are just maintenance?
Typically, I will say yes, but it depends. Typically, we'll go through and we'll help a company customize a month-end checklist to meet their needs. Because every company that we work with is different. We have some companies that parse out, those maintenance type reports and module-based type reports to individual departments so that the finance department doesn't have to run any of them. And then there are other companies that have limited, much more limited resellers or resources, much smaller usually, that finance is just going to do everything because they've been giving being held accountable for the system as a whole, which is another discussion for another time. So yes, we do have that, but we will normally work with our customers to make one that works best for the organization.
Well, that makes sense. All right. It doesn't look like we have any other questions from our audience. Thank you for all those who did submit questions. Those were great. And thank you again, Dennis, for taking the time today to give us this nice presentation.
Certainly, I appreciate everyone joining us. And if you have any questions, if you want to talk about going through any of or addressing any of these needs in particular, then more than happy to have a conversation with you and develop a roadmap for you.